Well, that's right. As we enter a whole new day in trade, let's take a look at the global cues from last night. Now, right at the outset, let me tell you, Asia is missing from our cues this morning because most of the major markets were shut yesterday, and I believe they're shut today as well. So no real cues coming out of our usual Nikkei, Topics, Kospi, ASX 200. We're just going to have to rely on what happened in America and Europe yesterday as well. So let's kick it off with America. The blue chip index, the Dow, I'm talking about, yesterday gave up some gains, slipping down from its record, but only slightly. The S&P and Nasdaq, however, continued to maintain their fervor and both eked out record closing gains. Now, the Dow has gained 0.9% this week, so I guess you can ignore yesterday's one single day motion, bringing the Dow's February gain to 4.8%. The S&P and Nasdaq have been up 0.8% and 1.2% for the week. For the month, the S&P and Nasdaq have rallied 5.4 and 7.3%. Now, yesterday, particularly one stock that stood out was Disney, gaining 2% in extended trade after reporting really robust earnings, 95 million customers plus significant revenue growth. So that stock was in focus. And as of this morning, futures for all three, the Dow, S&P and Nasdaq, are pretty much flat. Now, Europe yesterday closed high. The Stock 600, the major pan-European index, was up 0.5%. The tech stocks particularly stood out. They gained the most, but most of your sectors and major bourses wound up yesterday in positive territory as far as Europe is concerned. So equities, one might say they're pausing slightly in the wait for the next round of stimulus, and the Washington stimulus talks are underway. And until that happens, I guess we might be seeing more of a rotation to cyclicals. At least that's what leading brokerages like Jefferies are also flagging off this morning. Now, two commodities we always need to check on. Oil finally snapped its winning streak of 9 days yesterday. So they fell on Thursday, giving up some of the recent gains we've seen. Brent fell 26 cents, so very minor fall, but a fall nonetheless, or 0.42% to 61.21. So we're still above $61 a barrel. And then US WTI crude settled 44 cents lower, or 0.75% lower, at $58.24 per barrel. So nearly 60. So no real sharp pullback in oil prices. But of course, we've seen a prolific rally play out over the last 2 weeks, and that seems to be pausing a little bit yesterday. Gold prices also cooled off yesterday, about 1% as the dollar steadied, right? So the dollar weakness helps gold prices. If the dollar steadies, gold prices hit a bit of a halt. So that's what happened yesterday. Platinum also eased off a 6-year peak, which it had made earlier. Spot gold was down 0.9% to $18.26 per ounce. And then you had US gold futures settle down 0.9% also to $1826.80 per ounce. Those were the global cues for the Friday morning as we close out this week in